Right. Okay. Right. Okay, guys. Good afternoon and welcome back. Let's start the class. Hope you can hear me properly right now. So I think right after the first paper, now we are going to move to the second paper related, right? So only few things to cover. Then after that, we can go to the paper discussions, right? So we have limited time, but we need to do many things. So today I'm going to start from here. Financial statements of a sole trader, right? So these are the things need to be covered. Now I finished capital expenditure and the revenue expenditure fully, and I finished about the accounting concepts. After that, we discussed irrecoverable debts, but I again going to quickly cover it out, right? Then we discuss about other receivable, other payables, payments, other receivables, and the other payables part of that, right? Now I'm going to go with the flow. So financial statements of a sole trader, right? Prepare income statement to show the gross profit and profit for the year. Prepare a statement of financial position to show assets, liability, and equity. Now, normally businesses prepare two kinds of financial statements. This is for the sole trader businesses: profit or loss statement, and the uh, which means the income statement and the statement of financial position. In this chapter, we will learn about the financial statements of a sole trader, which include both the income statement and the statement of financial position. Accountants may be able to help sole traders save money even when they charge for their service. Right? Hint: you need to know the layout for both income statement and the statement of financial position, as they will not be provided for you in the examination. So these statements are not provided to you in the examination. So you need to know how to prepare these two things, right? Okay, right, right. Now, when it comes to this one, introduction to the income statement, right? Okay. Let's now first of all write the thing, financial statements of a sole trader. Write the subheading in a new page. Financial statements of a sole trader. All right. So sole trader means what? No, this is the sole trader, owner, and the business, right? You know, sole trader means what? Single owner. If we take about the accounts of a sole trader, we can identify two things. Number one, income statement. Number two, statement of financial income statement and the statement of financial position, right? Income statement include income and expenses, calculate profit generated during and accounting period. When it comes to this one, there are five accounting elements: income and expenses. We include income statement, and in here we include assets, liability, and equity. Present financial position means show up. Present means not the current. We present. Actually, current is also same. Present financial position of the firm as at a particular date. Right? Right. So there are five accounting elements. So out of that, income expenses goes to A, assets liability, and equity goes to T. Right? Right. All good? Right? Okay. So introduction to the income statement. Right? So let's see the income statement. Okay, in the income statement, what are the things we includes? Income and expense. The main purpose of an income statement is to allow the owners to see how profitability of the business is operating. So how this is about profitability. The chapter 1 to 8 discuss their groups that are interested in the financial results of a business, which such as bank if the business required a loan, and the tax authority. Users of the income statement. The trading organization pays a lot of attention to how much profit is made before deducting expenses, the gross profit. This appear in the first section of the income statement. The profit for the year shows the next section of the account. The yearly profit is equally important to the owners and their group's gross profit. This is the excess of the revenue over the cost of sales of the period. Profit for the period, the what remains of the gross profit after all the other expenses have been deducted. What is the term of cost of sales? The direct costs which are usually material and labor to make or to buy uh, a product. I'll explain what is the term called then. Okay. Preparation of an income statement. A trial balance must be drawn up for the double end system before an income statement can be prepared. A trial balance contains nearly all the information is required, right? Example, so the trial balance for Saha is shown figure 14.1. Look out for the closing inventory which are usually appear at the bottom of the trial balance in the north section. Revenue returns are the goods that have been returned by the customer, sometimes called return inwards. Purchase return are the goods that the business send back to the supplier, sometimes called the return outwards. Carriage outward is a cost incurred when the supplier charge for delivery on the carriage uh, on the goods purchase. Now you can see now in here normally like our accounting period mainly like this. Right. Okay. Now you need to know about this one. Now, what is the process of the accounting process? Accounting process. Tell me the accounting process. Accounting process up to here. What we have done. Now, no, you know. Once a transaction happen, what we have done. Once a transaction happen, what we have after that. Once a transaction happen, what we did. We what we did. Once a transaction happen, we no. Once a transaction happen of the prime in the books. Business documentation, source document, preparation of business documentation. Then after that, recording the books of original entry, recording books of original entry. In here, which means in another word, source document means primary books. Then after that, yes, what we have done. Posted to ledger. Can you remember? So then we recorded nominal ledger and the receivable and payable ledger. Then after that, we take the nominal ledger balances and control accounts also available there. So then after that, we prepare our trial balance. Then after that, finally, financial statements. Financial statement. That is the final step. Financial statements. That is the final step. Understand? So after finally, we need the financial trial balance. We take the trial balance figures to prepare the financial statement. Right? I write it again. Financial We already prepare the trial balance as well. Now, what I want to tell you, there are different kinds of businesses. You need to know. Normally, there are different kinds of businesses. One category we can take trading business. Trading businesses. What is the term called trading businesses? Huh? No, which means buying and selling business. Buying goods, adding a profit, selling goods. Your nearest procedure. There is no any manufacturing. Understand? So, which means buying and selling goods business. Which means what they do, they purchase goods, finished goods, purchased finished goods, and after that they add a profit. They sell to who? Customers. Think like 100 worth of goods purchasing. This is finished goods, adding like 20 profit and selling to 120. Understand? Just only buying and selling. Look here, I'll give the time. Then after that, there can be some businesses, manufacturing businesses. Manufacturing businesses means manufacturing businesses. What is the term called manufacturing business? They purchase materials and there is a manufacturing process. This category, they purchase finished goods. There's no any process, but some businesses purchase like materials, and after that in the business there is a manufacturing process, and after that sale to customers. Think they purchase like 100,000 of 100 worth of materials, and what they does, there's a manufacturing process plus they add the profit, and this thing, then after that they sell it to 150, like 150. Got it? Right? And there is another business category we call like, there is another business category pure service businesses. Pure service providing business. In here, in this category, there goods are there. In here also there are goods, but pure service, just only the service. There is no any goods in the business. There are some items just for the support for the service. For an example, this Guru Niwasa is also service providing business. We are not offering goods, but we need some items for providing the goods. Now they just service providing business. So there is uh, like just only service providing business. Service providing business. You need to know, we need to prepare accounts for all these categories. What are the three categories? Tell me. First one, buying and selling goods. Buying finished goods, adding a margin, selling. Manufacturing business, buying materials and there's a production process, then they sell the goods. Sometimes there can be pure service businesses, which means like they are only providing services to the customers, right? Finish it and raise your hands, write it. So I wrote up here. So I wrote this part. Just keep space to write, dear share, while referring the recording. Till that, just after that, just Hold on. Yes, you're done. Once you're done, raise your faster. Right, all good. Right. Okay. Now let's see. Just remember, when it comes to income statement, right, the subheading, preparation of the income statement. Now we are going to discuss about the income statement. So we just finished about the accounting process and how to, what are the things. So just write the subheading, income statement. Income statement. Right. Now you know, when it comes to income statement, right? Why we need to prepare the income statement? To allow the owners to see how profitability the business is operating, right? So why? To allow the owners to see, why? Prepare, to allow the uh, owners to see, owners see, see how profitability the business is operating, how profitability, how profitability the business is operating, how profitability business is operating, how profitability the business is operating. We calculate using two ways. First, we calculate the gross profit. After that, we calculate the net profit. These are the two ways. First, we calculate the gross profit. After that, we calculate the net profit. Right? Now, simply, gross profit means sales minus cost of sales. Right? Sales revenue minus cost of sales. Right? Simply, gross profit means sales minus cost of sales. Gross profit, how we calculate? Sales revenue. From that, we deduct cost of sales. I'll tell you what is the term called cost of sales, right? Then after that, how we calculate the net profit from the gross profit, we calculate, deduct different expenses. Then we can calculate the net profit, right? All the expenses we deduct from here, then we can calculate the net profit. Easy, creative, send me a thumbs up, right? So then we can calculate the, right? It's like this. Now, so gross profit means, so for that I'll take like number one. I'll keep it W number one, working number three. I'll explain one by one, right? Simply, gross profit means in here it's clearly says, right? So if it's like this, now if the sales are higher than cost of sale, it's a gross profit. If the cost of sales higher than sales, it's a gross loss. I'll tell you it's like this. Now, simply gross profit means profit earning through buying and selling goods. Stocks අරගෙන sell කරලා එන profit එක තමයි gross profit කියලා. දැන් අර මම කිව්වේ I told you. Now if we purchase 100 worth of goods and sold it to 120, our profit is how much? 20. That profit is the gross profit. But there is a matter. You know, we prepare this one using concept called accrual concept. What is the term we apply? We apply accrual concept. Apply accrual concept. What is the term called accrual concept? Include income and expenses relevant for the period, which means not from the cash basis, the income and expenses relevant for the period. Now you know when it comes to our sales, there are two kinds of sales. Look here first, write later. You didn't know it, write later, don't write. Just look, right? There are two kinds of sales. What are the two kinds of sales? Cash sales and the credit sales. Cash sales means what? Selling goods and taking the cash at the same time. Credit sales means what? Selling goods and receiving the cash later. Sometimes the cash will not receive till the year end or the accounting period end. Because of that, in here we apply the accrual concept, we apply relevant for the period. So when it comes to sales revenue, don't write. What we include in sales revenue means, right, cash sales plus both credit sales. That's appear in the trial balance credit side because it's an income. So in the trial balance, incomes are available credit side. I'll explain, right? In here, sales revenue means the net sales. It's like this. Now, you know, actually, we take the net sales. Net. It's like this. Net sales, which means we take sales revenue, how we calculated. Normally, sales revenue minus carry return inwards, which means the sales return. This is how we get this one, which means if there is any sales revenue, we get the net revenue, sales revenue, which means after deducting all the return, sales return, understand, right? That is how it is. Now, when it comes to number two, cost of sales. Cost of sales means, now I told you we mainly concern about buying and selling business. Now out of these three categories, we mainly concern about buying and selling business. In a buying and selling business, cost of sales means cost we bear to purchase this one, understand? But there's something matter. Now you can see if we take the accounting period, if I take like 2024, right? Uh, April 1st is the beginning date, right? So ending on 31st of March 2025, which means 24-25 accounting. If we take this one, now you can see there are, like, during the period we purchase the goods to the business. We purchase the goods during the period, right? We sell the goods. Sales means what? Sales also available. Sales means with profit. We purchase goods to the business without profit because they give and we adding a profit and we sell the goods, right? Without profit. And also there's something called opening stock. Opening stock means what? Last year closing stocks. Now if we take the previous accounting period, the ending date, there is, we can't consider like there is no more stocks available in the business. So yeah, December 30 එක ගෙවල් ළඟ තියෙන සිල්වර කඩේට ගියාම මුකුත්ම නැති වෙන්නේ බඩු තියෙන. So there is something called low opening stock. Last year closing is the this year opening stock, right? And this year closing stock also available. Closing stock is also available. And just remember, sometimes we purchase items, we return. So there are purchase return. Right? This is also without profit. All these things are without profit. Without profit. And there are two expenses which engage with the purchases. These are carriage inwards. Carriage inwards means sometimes the supplier deliver the goods to our business by charging delivering charges, right? And also, yeah, carriage inwards are there. Now, what I want to tell you in here, right? Now, if we want to calculate the cost of sales, which means cost of that sold goods, the cost relevant to that sold goods, first we take what? Opening stocks. Opening stocks we get. Why? Opening stock for sure will sell within this period by adding a margin. Opening stock කවදාවත් මේ අවුරුද්දේ අන්තිම වෙනකන් තියාගන්න නැහැ. ඒ තවත් expire වෙනවා. You need to sell it by adding a margin. And to that we add purchases. Purchases means this year purchases. Right? This year purchases we add, right? And also we add carriage inwards. Carriage inwards. Carriage inward means what? The like amount we spend to bring the stocks to the business place. That is the term called what? Carriage inwards. Easy, clear? Right. Okay. Right. And also, what I want to tell you now, not only that, from this we return inwards, return outwards, sorry, which means purchase return. ගත්තේව අපි return කරනවා. ඒවා අඩු කරන්න. Then we get the net purchases. Then we take the net purchases. Now you know it's like this. When it comes to sales also, in the business there are sales return, means return inwards. Right now in here we know I told you when it comes to sales we take the net sales, which means what? Just wait. Right. Okay. So sales, right? Now our main objective to calculate the cost of sales. It's like this. I'll simply tell you, right? Cost of sales means the cost relevant to the sold goods. Understand, right? Right. So how to calculate the, which means cost relevant to the sold goods. Sell කරපු goods වල cost එක. First we take the opening stock, and to that we add purchases and carriage inwards. These are the like, and from that we deduct the return outwards. Why? Then we take the net purchases. Now simply this is the opening stock. This is the purchases. This is the, if I take this is A, this is B. මේ තමයි අවුරුද්දේ මුල තිබ්බ stock එක. මේ ඇවිල්ලා අවුරුද්දේ ගත්ත ස්ටොක්ස් ටික. ගත්ත ස්ටොක් එක කොහමද ගන්න? ගත්තේවට ගේන්න ගිය ගාන එකතු කරලා හරවල යවපු ටික අඩු කරනවා. තේරුණාද? ඒක තමයි ඇත්තටම ගත්තේවා ගත්තවල cost එක අපිට එන්නේ. First we take the opening stock. Understand? Then we take the purchases. How to get the purchase? From the purchases ගත්තේවට ගත්තේව ගේන්න ගිය cost එක එකතු කරලා හරවල යවපු ටික අඩු කරනවා. That is the term called purchase. Understand? And then after that, which means the total of these two means now available, the stocks available for resale to the customers. Sell කරන්න තිබ්බ. opening ඒවත් තිබ්බ, ගත්තේ ඒවත් තිබ්බ. ඒකෙන් customers ලා ගත්තේ නැති ටික තමයි closing ඉතුරු වෙන්නේ. So now what we need to do? We need to deduct the closing stock. Closing stocks. Closing stocks. We need to deduct the closing stocks. Once we deduct the closing stock, then we calculate the cost of sales. I'll repeat it again, right? What is the term called cost of sales? Cost of sales means like, hello. Right. Cost of sales is like this, which means like the cost we bear to bring like the cost of the sold goods. Again, opening stocks plus this year purchases. To get the this year purchases, there should be one thing: purchases plus carriage inwards. From that we deduct the return, our purchase return. Then we take the net purchases. Now these two hello, I will. So what I want to tell you, these are the two things available for customers. We are telling like these are the two costs we bear and like we kept in the showrooms to purchase the customers. But when the customers are not purchasers, it's not our cost. It is the next year opening stock. That's why we deduct. Just you need to remember the thing. Okay, opening stock plus purchases, carriage inwards, then return outwards, then net purchases minus closing stock, then the cost of sale. Understand? Just remember how to do it. Now tell me how to calculate gross profit, sales minus cost of sales. How to calculate sales? sales revenue minus return inwards or the uh, sales return. How to calculate the cost of sales? Tell me. Opening stock plus purchases, carriage inwards minus return outwards, then the net purchases, then minus closing stock, then the cost of sales. Understand? Easy, clear? You send me a thumbs up, right? So this is how it goes, right? Now we calculate two things. You know how to calculate the sales. Now let's write the full thing, right? Up to gross profit, sales. First we take the sales, right? From that we deduct the sales return minus sales return, which means another word, return inwards, right? Which means, right? So then we get the what? Net sales. Understand? Then we get what? Sales. There, no? From that we deduct cost of sales. From net sales we deduct cost of sales. How to calculate cost of sales? First we take the opening stocks. Understand? Right? Opening stocks. Right? Then we add purchases. Then we add carriage inwards. From that we deduct return outwards. Or another word, purchase return. Then we get what? Net purchase. Then again we deduct closing stock. Right? Then we take the cost of sales. Once we deduct, we get what? Gross profit. Gross profit. Gross profit. Right? You can see that's why sales minus sales return, then it, or cost of sales, opening stock plus purchases, carriage inwards, purchase return, then the net purchases, right? Then you know, then after that minus closing inventory, then we get the cost of sales, then we get the gross profit. From gross profit we deduct expenses, right? Expenses. Now you know, in working number 3 I gave you expenses. Expenses mean expenses, right? Expenses means expenses except cost of sales, which incurred for business goods distribution, administration, finance, and other. For an example, we can take like electricity, rent expense, bank loan interest. Those things we separately deducted after the gross profit. Understand? So once we calculate the gross profit, first we take the gross profit, then we deduct the expenses, minus expenses like electricity, right? Rent, delivery. The total we take to here, then we deduct, then we take what? Net profit. Normally, the correct profit is the net profit. Gross profit means half. Gross profit means only profit generated through buying and selling goods. Net profit means after that we deduct the other expenses, right? So now you know the full process, right? Okay, right from the beginning. Right from the beginning. When we are doing the calculations, you can have the idea. Liasha, once you done, raise your hands up. If you're done, once done up to here, raise your hands. right? Right up here and ratio is the last part, right? The last part as well. And raise your hands. Done. Right. Okay. Now you know up to that. Right now you remember when we are taking this one, you need to be careful, right? So returns, revenue returns is, I told you what it is. Income decreases things, right? Sales return or the revenue return. Sales are revenue, same word, right? So those are in the debit side of the trial balance, right? Purchases now, which means it is income decreases, it's a debit side. Purchases return, expense decrease, so it's available on the credit side. Right? Carriage inward expense, it comes under debit side. You can see, right? Always check the date for inventories. There will be an opening inventory and closing inventory, which means beginning date period stocks means the opening stocks, right? Note that accounts with the trial balance may appear in order of financial statements, right? So you can see like this. Correct. Now you can see in here there's an example. Sales revenue return are given. So you know in here sales revenue return, then the net sales. How to calculate the cost of sales? We take the opening stock 7,000, so we write it under here. Purchases how much? 34,000. You can see purchase return 3,000, so 34,000. So purchase return 38,300. Sorry, 38,300 purchase return. Yeah, sorry, purchase return 3,000. You can see purchase return 3,000, and there is a carriage inward. You can see carriage inwards 300. There's a printing mistake in here, just write purchase return 3,000 in here. In your book write 3,000. So if you take the full 7,000 plus 34,000 plus 300 minus 3,000. So this is the net purchases, right? Then once we read 3,300, then you know cost of sales. You can. this is it's 35,000, right? So from that we deduct different other expenses, rent, wages, electricity, admission, fuel, and those things. Just remember expenses, all the expenses available on the debit side, right? So they are asking us to prepare this. Then you can see you can get the profit for the year. You should only use figures from the trial balance once. So tick off the figures you go so you don't miss anything out. This will make it easy when preparing the statement of financial position. So in here, let's see, prepare the income statement. Let's prepare this one. Right, case study. Write in your writing book. Case study. Case study. Page number. What is the page number? 161. Let's do it. Right. Okay. Write the name first. So this is whose business is this? This is Jarshad, right? Jarshad business. Just Raj restaurant. Just Raj restaurant. Income statement for the year ended. There is no any year given, right? Yeah. So 31st December 2016 is the ending date. 31st December 2000. First, fully write the format. Revenue, right? For the sales, both are same. Sales revenue and the revenue return. Sales revenue, sales revenue minus return inwards slash sales return. Then the net sales, net sales revenue minus cost of sales, right? Stocks as at 1st January 2016, the opening stock plus purchases, then the carriage inwards, right? Then minus. So keep one line and then write minus purchase return for the return outwards. Then then you can write net purchases, net purchases minus stocks as at 31st December 2016. Then you get the gross profit, from gross profit minus expenses. Down. Right. Let's see. Right. Now let's feed the information to here. Taking something, put ticks, right? Then you can have a clear idea. Sales revenue 150,000. Now what I suggest? Yeah. Sales 150,000. Taking something, put ticks, right? Then administration expenses, it goes to the expenses. How much? It's 1,000, right? Yeah. Pay the pen. Let's see. Now sales 15,000. Sorry, 150,000. Then administration, it comes on the debit side. Now every time remember, asset and expenses are in here mainly. Liability, income and equity credit, but sales return, purchase return, those things are separately changed because it's a asset expense decrease, income decreases things, right? So administration is an expense, so it comes under debit. So that's why, so it comes to the expenses. Now right under here, administration expenses. It's 10,000. Done. Bank credit we are not taking because bank balance is an asset, but balance credit means it's a bank overdraft, which means a liability we are not taking. Bank loan is also a liability we are not taking. Building assets we are not taking. Equity not taking. Carriage inwards 500. So we write under carriage inwards 500, right? There's a separate space to write the carriage inwards. So we write carriage inwards under here 500. 500. Carriage inwards we write under here. Cash balance we are not taking. Assets drawings comes under equity. We are not taking. Electricity 7,000. It is an expense we write under here. Electricity 7,000 we write under expense. Right. Then fuel expense, insurance expense, right? Fuel 5,000, insurance 6,000. Fuel 5,000, insurance 6,000. Done. Inventory as at 1st January 2016 means the opening inventory 12,000 comes under here. Opening inventory 12,000, it comes under. Motor vehicle assets we are not taking. Purchase return, it is 6,000. So purchase return we deduct from here 1,000. Purchases 45,000 comes under here. Purchases 45,000. Rent 30,000 expense, it comes under here. Rent 30,000 comes under here. Revenue return 6,000, income decreases, so we write under here. Trade payables, not writing. Liability, trade receivables, asset. Wages expense 25,000. Those like cutter things goes to the like uh, remove thing goes to the SFP. The next one, brackets, because it decrease our sales income. When we sell, when someone return it, it decrease our return. Right? So in here, wages 25,000, it is an expense. Wages 25,000. Let's see. Right. 150,000 minus 6,000. 144,000, right? So these are the added things. Then from that we deduct. They have given you the closing stock as an additional note, I saw. Closing stock is there's a note. How much? 8,000, right? It's 8,000. So write it separately. Closing stock. They are giving like 8,000. Closing stock 8,000. So we are taking it to 8,000. So closing stock comes under here. Deduct. Right. Now take 12,000 plus 45,000 plus 12,000 plus 45,000 plus 57,500. From that deduct 6,000, 51,500 minus the closing 1,000, 8,000. So it's 43,500. It's 43,500. Then it's once you deduct this one, 100,500. That is the net profit. Just remember, purchase return and the closing stock we are deducting. So hope all good. Then get all the expenses total and deduct it from there. Then you get the net profit. How much? 10,000 plus 7,000 plus 5,000 plus 6,000 plus 30,000 plus 25. 83,000. 83 minus 17,500. That is the net profit. Hope all done. Right. Hope all done. Definition and content of the statement of financial position. In here we include, we include what? In asset, liability, and equity. Statement of financial position is the financial statement that set out the book value of assets, liability, and equity at a particular point in time. In simple terms, statement of financial position shows what a business owns and what is owes on a specific date, right? So you can write statement of financial position. Statement of financial position. Right? In here, this include assets, liability, and equity at a specific date. And I told you this is shows what a business owns and what is owed. Shows what a business owns and owes at a particular date. Owns means what business belongs. Owe means liability. Like to owner or the external part. Owns means assets. This should equal to liability plus equity. Owns means these two. Owes means these two. This is external. Owes. This is internal law. Internal laws to owner. Now let's read. First, we find the details of the assets, liability, and equity in the records of the business. Then we write them out as a statement of financial position. These details are readily available since they consist of all the balances remaining in the records once the income statement for the period has been completed. All balances remaining have to be assets, liability, and equity. The other balances should have been closed off when the income statement was completed. Right? Right. It's like this. Right. Now, layout of the statement of financial position. The statement of financial position is one of the most important financial statement, and it must be easy to follow and understand. Over the years, the presentation of financial state information has evolved. The present format of the statement of financial position is shown in figure 14.4. The statement of financial position start by listing all the assets that the business owns at the date of the statement. Right? So the assets are split into two categories, non-current assets and current assets. This is followed by details of the funds acquired to finance the business, right? Now, normally, if we present like this, total assets of the business equal to equity plus liability, or the liability plus equity. Look here, right? Now, assets we categorize into two. Assets means what? Assets we categorize into two: non-current assets and the current assets. We present like that. Assets we categorize into two, right? Non-current assets, I did this one in the class. I gave a note as well. Check, right? Non-current assets and the current assets. So what is the term called non-current assets? Non-current assets means assets that are expected to be used to the business for more than 1 year are to be used in the business. They are not bought only for the purpose of resale. Building, machinery, motor vehicle, fixtures and fittings, those are the things. Non-current assets are listed from the statement of financial position. The list start with the assets that the business will keep the longest and goes down the assets that shorter life expected. For example, property, fixtures and fitting, machinery, motor vehicle. Non-current assets can be categorized into tangible and intangible. Tangible assets include motor vehicle and building, whereas intangible include such as patent. Patent means buying the right to use another company's inventions. Now normally non-current assets means we expect to use more than 1 year, which means usage is more than 1 year. So we present building, both those are the things. There are two categories: tangible and intangible. Tangible means things we can touch, property, fixtures, machinery, motor vehicle. Intangible means we can't touch. For an example, patent. Patent means think you invented a new thing. If you invented a new thing, you can take a patent license. ඔය අලුත් දෙයක් හොයාගත්තොත් ඔයාලට patent එකක් ගන්න. ඔයාට ඒ patent එක කාට හරි sell කරන්න පුළුවන්. You can sell it. When someone buy that patent, you need to pay some amount. That is the term called patent. Understand? You pay tax එකක් මේ patent හදපු එක්කෙනාට ලොකු ගාණක් දීලා තමයි ගන්න. දැන් අපි බල්බ් හදනවා කියලා හිතන්නකෝ. ඒ බල්බ් එක හොයාගත්ත වෙන එක්කෙනෙක්. ඒ බල්බ් එක හොයාගත්ත එක්කෙනාට ලොකු ගාණක් හැම මාසෙම ගෙවන්න ඕනේ. හරි මොකක් හරි ලොකු ගාණක් එකපාර ගෙවන්න. That is the term. Normally at one time pay, right? Current assets. Current assets are assets that are like to change in near future within 12 months of the statement of financial position date. They include inventory of goods for resale at a profit with always a closing figure, amounts owed by trade receivables, cash in the bank and cash in hand. Current assets are listed. Start with the assets that are least like to be turned into cash and finishing the with cash. First, we write the inventory trade receivable, cash at bank, then cash in hand. Now, normally, uh, like current assets means usage is lesser than 1 year. In here, non-current assets we categorize into two: tangible and intangible. Right? So when it comes to assets, like we listed from, I told you we listed uh, longest to shorter life expected. When we present this first from top to down, longest life expect, then we write shortest life expect. When we present this one, for an example, we can take like first we take building, then machinery, motor vehicle like. In here we present current assets, less least like to be turned into cash and least like to turn into cash, least like to turn into cash, then after that cash. For an example, you can write stocks, trade receivables, then the cash. These are the examples, right? So when it comes to liability is also classified into two: non-current liability and the current liability. Same. Let's see what is the term called non-current liability and current liability. Non-current liabilities are liabilities that not due for repayment in near future. Examples: bank loan, loans from others such as such as friends or relatives, and mortgage. Non-current liabilities are added into the current liabilities and equity in figure 14.4. Now like repayment not in future. Repayment repayment not in near future. When it comes to current liability, which means liabilities that are current liabilities are liabilities due for repayment in short term, usually within 1 year. Repayment in short term. Repayment in short term, which means simply in here repayment is higher than 1 year. In here repayment less than 1 year. Means we need to quickly repay. That is how it is. Right? Current liabilities can be deducted from the current assets that gives the net current assets or working capital. So working equity, this figure is very important in accounting since it shows the amount of resources the business has in the form of readily available cash to meet every day-to-day running expenses. If we deduct current liabilities from current assets, if we take these two, Working capital we calculate equal current assets minus current liability. That is the term called working capital. Right. So equity account, if the proprietors or the partners account with the business, it start with the balance brought forward from the previous accounting period. Any personal cash introduced into the business is added, as well as profit made by the business in this accounting period. Amounts drawn from the business are deducted, or any losses made by the business also deducted. Right. It's like this. First, we take the opening equity or the capital. To that, we add additional capital, and from that we deduct at profit, and profit we calculated through income statement, and if there's a loss we deduct, and also we deduct borrowings. Then we can calculate the closing. This is the format of the profit statement of financial position. Let's do this one after that, or let's do the other one next day. So can you please write it and raise your hands. This is the figures. These are the figures right from the beginning. All the things included in one picture. Once you done, raise your hand. Once you done, raise your hands. Done? Yeah, sure. Right? Okay. Now you know now the financial statement of financial position thing, and the these things will be discussed another date. Most probably tomorrow I'll update the group, right? Tomorrow like 6:30. So then we can finish it. So then the other receivables and the other payables we can finish, right? Because I have done part of this one, right? So recoverable days part I'll done, but I'll do some revision part. Then again we need to do the incomplete records, right? So then the ratios we need to finish. Then the partnership and the manufacturing, as I can see, right? So and the manufacturing, right? So once my target is to finish everything like till 10th, do the theory parts. After that, we can do the theory papers, past papers, right? Okay. So now it's 10 second. So let's do like I'll tell you the plan. So most probably I will be doing the class tomorrow as well. I'll update you, right? Okay. Thank you for the participation. Bye. Certainly got this.